Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, October 3rd. Q3 in the books, Moose.
Unbelievable. Went fast, and the rest of the year is going to be rushing by.
It's a sprint. It's a sprint. Moose has a couple of thoughts on, I guess, what you would call the headline this week. I think the market looked through it, looked past shutdown headlines and shutdown news.
Yeah.
Any thoughts there on how it may affect or did affect the bond market, or more specifically our bond portfolios?
No, not specific to our bond portfolios, but in general, what we saw this week, government shutdown. We'll say everybody knew it was coming. If you look at past government shutdowns in the last few years, they've also had the same theme to them. Creates uncertainty. What do you have with uncertainty? People rush to the safety of treasury bonds. This week, no exception. Yields down a little bit. 10-year bonds down to a 412, down 5 or 6 ticks. 30-year bond down 4 or 5 ticks. Muni bond yields down a couple of ticks. Everything is just kind of dropped. So bond market's in good shape. You know, the real question is that you do something like, and by the way, travel out tip, I was in Nashville with some friends this week, earlier in the week. Go to the airport. Lines were not long. Why? Because essential service people such as TSA, traffic controllers, there. Does that change as you go forward and you start seeing some sick outs and things like that? And that's when the lines start, and that's when the grumbling really starts. On the other side, you know, you have the problem, well, at least for the bond guys, we don't have the jobs number this morning because it's not being let out because there's no government workers to let it out.
Is there anyone I can pay to get less economic data?
No, but you can just tune them, tell them to quit watching TV. It's fine.
Bond people hang on those economic numbers. You know, to me, they're almost too frequent and too much noise. Price tends to react to the headlines, and we watch price. But
sure, absolutely. So, you know, you sit there and you say, okay, this has been tried and true. We went back and looked at some other government shutdowns, and they all had kind of the same theme. Kind of a, just not sharp, but just kind of a slow drop, dripping drop in yields. And this time is no different because you don't know when they're going to get back. We hope it's next week, but who the heck knows? You don't want to be sitting there with the World Series coming around the end of the month and the government still being shut down.
Yeah, you bring up a good point there. And the status quo opinion seems to be short-term shutdown.
Right.
But what if it's not? And that we do have to factor into at least how we allocate portfolios. And I bring up that allocation because the longer I'm in this business, and I've been in this business longer than I care to remember, it keeps coming back to compounding equals proper allocation. And trying to have that allocation suited to a personality in the markets. Everybody's different. Lean on your allocation. Make some changes if markets start to get you concerned around the edges. You've heard me say now for years, we do not make light switch moves in, out.
Right.
But we will dampen the portfolio, raise a little cash here and there. What we're always looking for, it's easy to talk about, difficult to find, is asymmetric trading situations. What's asymmetric? Where the risk is capped, or at least you feel it's minimized with a large runway on the reward side. Asymmetric, right? Symmetric is even on both sides. We want to cap risk, tight risk, long slope on the reward side. Today, I'm finding a little bit of difficulty finding asymmetrical bets in the equity market. I love the equity markets. We're dead long for the most part, tag end cash here and there. Even in the areas that are non-tech, while they're trading well, and I have an awful lot of respect for trend and relative strength, as you know, when you plug in some of the valuations, you really have to be aggressively optimistic on some of these out years to say a good number of these equities within the S&P or the NASDAQ 100 are reasonable. So in other words, if we're getting long, not already long, but getting long new names, we're really building in a heck of a case going forward.
Sure. One thing I would add to this, and Lord knows we've talked about this theme going through the whole year. Government shutdown's one more example. Here's politics. It's another thing. Got to let it go over your back, not pay attention. Go back and looking at the economics, both on bonds and on equities.
Yeah, so we're very comfortable that, listen, we finish out the Q3 probably like an awful lot of people, at all-time highs in the equity strategies and so forth, with some solid performance. But we can't take our eye off risk. And I mentioned that a week or two ago. As well as things are progressing, as much as the market is shrugging off noise and headlines, at some point the market won't.
Right.
And when that happens, when that changes, we'll change. We're not going to dictate to the market. It's been talked about on trading desks for years and years and years. Price is king. That doesn't mean we just defer to price. What it does mean is the market on any one day is right.
Right.
And if you feel it's wrong, tell the execution clerk on the other side that you got the wrong price.
Right.
So price is king short term, but we don't want to get into that scenario where we feel that the momentum and strength is just unending. So we'll keep our eyes open. As I said, having a little trouble finding what I think are asymmetrical positive bets. But one thing is for sure, and this is an absolute, there will be volatility, there will be drawdowns, and opportunities will present themselves, and we have to be ready to act.
Absolutely.
All right, Moose, thanks for joining in.
Thanks, man.
See you next Friday.